Hi everyone, welcome back to Corporate Decoder. Today we're diving into Formation Minerals Inc.'s latest filing. And let me tell you, after reading it, I feel like I need to go mine for some serious financial clarity. This is an 8K filing, which is basically a company saying, hey, something important happened and we need to tell everyone right away. It's like a corporate emergency broadcast, except instead of weather warnings, it's about money. The earliest event that they're reporting on happened on March 5, 2025, but the report itself is dated March 12, 2025, so they're letting us know about this a week later. The first thing they mention is item 1.01, entry into a material definitive agreement. That sounds complicated, but it really means they signed a deal that's important to the company. Next up is item 2.03. Creation of a direct financial obligation. In simple words, they took on a debt, they have to pay money back. Here's the deal. On March 5, 2025, Formation Minerals got a loan from Alumni Capital LP. Alumni Capital is basically a company that gives money to other companies hoping to get more back later. This loan came in the form of something called a promissory note or the alumni note. Think of it like an IOU. Formation Minerals promises to pay Alumni Capital back. The amount of money they borrowed was $60,000, but here's the twist. They only got $50,000 for it. It is called an original issue discount. It just means they got less money up front than they have to pay back. That extra $10,000 is like a fee for the loan. The loan matures or needs to be paid back on May 5, 2025. The company says they will use the money for legal stuff and general working capital. That means they'll use it to pay bills, employees, and keep the lights on. The loan has an interest rate of 10% per year, so on top of the $60,000, they have to pay 10% of that as interest. That's another $6,000 a year. They have to pay all the money back, including the interest, by May 5, 2025. That's not a lot of time, just a couple of months. The good news is they can pay it back early without a penalty. But if they don't pay on time, the interest rate jumps to 22% per year. That's a huge increase and a big problem if they can't pay. The alumni note also says what happens if Formation Minerals messes up. What happens if they don't pay? Alumni Capital can say, pay us everything now, instead of waiting until May. Also, if they don't pay, then the interest will accrue at 22%. There's also something called a conversion option. Alumni Capital, if something goes wrong, can turn the loan into shares of Formation Minerals stock. The price at which Alumni Capital can convert this debt into stock is equal to 60% of the lowest trading price for the shares during the 30 days prior to the conversion date. This is a 40% discount, which means that Alumni Capital will be getting the stock for a lot cheaper. One important thing to note is that Alumni Capital cannot own more than 4.99% of Formation Minerals stock after converting the debt. This is probably to avoid certain regulations. And if Formation Minerals doesn't give alumni the stock when they're supposed to, the company has to pay alumni $1,000 per day as a penalty. There are also a bunch of standard promises and guarantees in the agreement. Basically, both sides are saying we're being honest and we'll do what we say we're going to do. Here, the company's just saying that when they issued this loan, they didn't register it with the Securities and Exchange Commission, which is the government agency that oversees companies. They're saying they didn't need to because of certain exceptions. Enclave Capital LLC, an investment banker, is taking 8% of the aggregate consideration received in the agreement, plus reimbursement of expenses up to $50,000. So what's the big picture here? Formation Minerals needed some quick cash and they got it by taking out a short-term loan with pretty high interest and some potentially painful penalties if they can't pay it back on time. Now, let's step back and look at what this all means for Formation Minerals. On one hand, they got $50,000 quickly, which can help them cover immediate expenses and keep the company running. On the other hand, this loan comes with some serious risks. The 10% interest rate is already pretty high, but the potential jump to 22% if they miss the payment deadline is a huge red flag. It suggests they're in a tough spot and might not have many other options for getting money. The conversion option, where Alumni Capital can turn the debt into stock at a discounted price, could also dilute the value of existing shareholders' stock, because there is more stock in the market. Overall, this filing paints a picture of a company that's struggling with its finances. While the loan provides a temporary fix, it also introduces some significant risks that could hurt the company in the long run. Investors should definitely keep a close eye on Formation Minerals' ability to repay this debt and manage its cash flow in the coming months. Thanks for watching. If you found this breakdown helpful, give us a like, drop a comment, and subscribe for more corporate deep dives.